We're now going to take a look at horizontal levels of support and resistance. And a little bit later on we'll have a look at some diagonal forms of support and resistance as well, which are more commonly referred to as trend lines. Now we're currently looking at the pound-dollar daily chart, the cable daily chart. And I've got a couple of horizontal levels already marked on here. We're going to start with one right at the top, and we can see that price is bouncing off of it consistently, and it's moving to the upside, bouncing off of the horizontal level, and moving away from that level again. That's what we call a bounce off of a horizontal level, or a bounce off of a resistance level. We can see price has gone up, failed to break through the level, and been pushed away again. We can also see over here, price has gone up, gone sideways for a period of time, tried to break through, and been thrown back to the downside. Again, it's tried to break through and get thrown to the downside, and we can also see this final one here, just pushed right through and been thrown straight back again, almost like a bouncy ball. Now, these horizontal levels of support and resistance are very, very key in trading as a discretionary trader, because they help you to identify zones whereby price is likely to change direction. Now, support and resistance levels can be used in trending and ranging marketplaces. Obviously, here on this chart, it's more range bound than it is trend based. There was a period of upward trend through here, but on the whole, this is pretty much a sideways marketplace. We can see that at the top of this range, price has reacted off this level again and again and again. And when price hits a horizontal level and bounces off of it in this fashion, whereby it comes up to the level and bounces down, that's called a resistance level. So price tries to push up through a level, fails and bounces away to the downside, that's called a resistance level. We can see another example of that further down here, where we have this level here that goes touch, 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 and again. We can see that this here price moving up to the level and down again, moving up to the level and down again, and eventually breaking through. That's actually a resistance level through there. So if resistance levels are where price moves up to them and then moves down, a support level is exactly the opposite. It's where price moves down into the level and then gets thrown to the upside. Gets moved down into the level and then potentially now moves to the upside. So now that we've identified what support and resistance actually is, resistance moves up into the level and support moves down into the level. You can also see how a horizontal level can be both a support and resistance level. In fact, this smaller, thinner line through here acts as both. It starts off as a support level over here, then becomes resistance, resistance, price breaks through there, and it then acts as support before moving strongly to the upside. And again here now, price has moved back down to this support level, and we could potentially be about to see a move to the upside. Now that's just looking at the pound-dollar daily chart that's a particularly sideways marketplace. To go across and have a look at the Australian dollar now, we see a very similar situation. If I zoom in slightly, we can see how price is reacting very strongly off this resistance level to the top side here. We can see the move up into the level, back down again, move back up into the level, this resistance level here, and back down. It hits it again, and it tests it again. So we can see it's a nice strong resistance level in a sideways marketplace. Certainly overall we can say the Aussie is overall here moving up. However, more recently we can see it's far more sensible to say that this is a sideways marketplace. We can see these resistance levels through here act as the top of this range, and the support levels through here, support, 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 and support, act as the lower end of the trading range. So we can see the resistance and support levels, and we can see how they have an effect going forwards. Certainly after a couple of touches to a level, we would be expecting to see a move away again, which we see over here. And similarly, after a couple of touches to a level, 1, 2, we'd expect to see some moves off of that level again. And of course, this is not just always going to be a support level or always be a resistance level. We can see this was originally a resistance level, becomes support, 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 and who knows what's going to happen next. So these are very, very key levels in sideways markets. The top end of the trading range, the bottom end of the trading range, the horizontal resistance level, and the horizontal support level. Now, you might be thinking to yourself, that's great, but how can I actually use that? And that's when your price action signals that come a little bit later on in the course will help you to take advantage of. If you're a newer trader, it makes a lot more sense to start off simply trading with the trend rather than trying to trade these sideways markets. As a result, there's also another way that you can use support and resistance in trending markets. If we have a look at that now on the dollar-yen, we can actually see through here, if I zoom into the more recent price action data, we can see price has obviously been in a strong upward trend. We can see this high here is a level of resistance that becomes support and again gets retested as support. So what we can see in upward trends is where this phase 2 pulls back to roughly the same level as that previous high. The wave 1, the phase 2, the pull back, the next move up to the upside, the pull back, and we can see how this level intersects through there. And that's a nice example of how you can use the horizontal levels there to find potential entries into the marketplace. At present, you won't identify those two price action signals that are there. However, once you've completed your way through the course, you'll actually start to understand the price action signals that are visible on this particular chart. Move a little bit further back, we'll see that it's not always going to be the exact one level that becomes the next one. It's not going to be this resistance level that becomes that support level. It doesn't have to be the very next one. But we can see that through here we have this nice touch to the upside, this resistance level, that then gets retested later on as support. And again, through here, through these resistance levels, there perhaps wasn't a huge amount that you'd have traded through there. There's maybe one price action, two price action signals you could have looked at. However, as you move across through here, there's definitely some price action signals around this area that you could have taken advantage of. And that's something, again, that you'll cover when you cover the price action patterns section of this course. But for now, suffice it to say, there's enough there for us to see how this resistance level actually then becomes a support level. We'll also see at times where support actually gets retested. For example, this pull back, this support level, there's a shallow move and it gets retested again. So through here we actually have two bounces off of this support level before we then get the move to the upside. So again, there's always, you'll see these horizontal levels through trending markets as well as just ranging markets. And that's how you can then use them to your advantage through actually using price action signals off of these horizontal levels in the direction of the trend. If we take a look now at some different charts, some euro-based charts in this particular case, we're going to have a look at something called trend lines or diagonal support and resistance. Now, trend lines or diagonal support and resistance is not perhaps as strong a signal as the horizontal levels are. The reason being that horizontal levels are actual price levels that price has reacted against. For example, we can see, if I draw this one on now, how resistance has become support, resistance becomes support through here, and price is moving to the upside. However, that's an exact price level or price zone where price has shown resistance and support. Whereas diagonal support and resistance or trend lines are much more discretionary than a horizontal level. We can see through here there's been touch 1, touch 2, touch 3, touch 4, 4 touches of this particular trend line, which is a diagonal line starting on the left and moving to the right. Obviously we can see through here this is an upward trend line because the trend line is moving to the upside. If we take a look at perhaps a downward trending market, we might find a trend line to the downside like so. So these trend lines here are potentially very useful for us. They should only really be used as an extra tool to help us find direction in the marketplace. They shouldn't necessarily be directly traded from unless there's more supporting factors, such as perhaps a moving average and the price action signals and things like that. If we move on to the final one now, we're going to have a look at the euro pound. And we're going to look at a trend line that's failed and then actually then created and formed a secondary trend line. So if we zoom in first of all, from the absolute bottom of this market, we can see how we've had touch 1, touch 2, arguably potentially touch 3, touch 4, and then the fifth touch here. Price moves to the upside, but it's quite clear the trend line gets broken at that point in time. Well, that's fair enough, the trend line's been broken. After touch 1, touch 2, and the arguable touch 3, we can certainly see that we'd have been interested in taking a trade around here, whether you classify that as touch 3 or touch 4. There was definitely a potential trading opportunity around here, which of course moved price to the upside. We then see, of course, that trend line got broken. Fair enough, we forgot about it. And then we see more recently the touch 1, touch 2, touch 3, whereby we have ourselves the higher highs, the higher lows, as per our cyclicity. And we can then see the touch 1, touch 2, and touch 3, the third touch on the level, of course, confirming that we have in fact got that support level. And we can see the large move from there that resulted, and it was a particularly strong move considering the fact that there was no signs in advance price was likely to move that aggressively. I'd like you to just bear these trend lines or diagonal support and resistance lines in mind, but I'd much rather you actually spend your time looking at the horizontal levels of support and resistance because they are so much more tradable on a consistent basis, particularly when you're looking at trend-based trading where you've actually got the resistance becoming support in an upward trend and of course vice versa for a downward trend. They're just cleaner, stronger signals when it's a horizontal level as opposed to being a trend line. Take some time now to go through, look at some charts and plot the horizontal levels as you go through. Rather than simply looking at all of the data, you can hide away some of the data like so, draw on some of the horizontal levels, and you can use the F12 key, that's the function key 12 on your keyboard, to cycle through one bar at a time and actually then plot what you would have done next. This is a very useful tool for simulating trades you would have taken, identifying opportunities, and of course then taking the trades as they occur. You've also got access to the trading simulator, which of course completely hides all the data away for you and replays the bars tick by tick in a speeded up time frame so that you can actually demo trade previous data. If this isn't something you've already had a go to test out yet, make sure that you do. It's in your trader toolkit. It's something that I strongly suggest you get set up and actually use because it just gives you that ability to place trades on real data and see what happens next. It certainly speeds up the learning curve significantly.